Welcome everybody to another video. It's time for a performance review, a portfolio update. This is going to be of the Story Fund, this portfolio right here. This is one that I created. It's part of the Patreon. I've been using that to fund it partially. And the purpose of this portfolio is to illustrate what I think is a portfolio that will be market beating. One that I think will have alpha over the S&P 500, meaning that if you invest your money in it, I think you'll have better returns over long periods of time. That is the goal of it. The goal of this portfolio, the Story Fund, is to beat the S&P 500, and I've outlined the way that I plan on doing that. I have it in the description, and I've expounded upon this in a separate document. But basically, I'm picking companies that have certain characteristics. They are companies that have good stories. So you pay attention to the story of the company. It's the future growth path of it, the products they offer. They're companies that are category winners. So out of this category, whether it's fintech, whether it's entertainment, whether it's gaming or streaming, whether it's a social media company, which ones are the winners? Which ones are really going to take a big share of that market going forward? They usually have first movers advantage. This one isn't a requirement, but many companies that have the special sauce that have made them take off in front of other companies, a lot of them tend to keep that. They tend to keep their first movers advantage. They're companies that typically offer convenient, easy, and simple products. You think about companies that have really done well, like PayPal, and they have something in common. They're convenient, easy, simple. Another one that I've been over is Netflix. Netflix is a very simple brand. Of course, they're highly scalable. Usually this puts them, not always, but this usually puts them into technology. Those are companies that are highly scalable, and they're companies with large market cap potentials. We're not looking for companies that have niche businesses that could be only applicable to a certain small subset of people. We want companies that have huge potential, that can grow worldwide and be dominant brands, even outside of the US, across the world. And that's what I've been focusing on with this portfolio. So we're going to see how this works. I think the companies in this portfolio are undervalued. I think they're great companies. I've been doing a lot of research on each of them individually and assessing them against their competition and other companies as well. If you'd like to see all the holdings in this portfolio and how I've weighted them, there's a link in the description called View My Portfolio, and that will show you it. So you can take a look at that. But let's go ahead and first of all, give a performance update. I want to see how this portfolio did against the S&P 500 for the past week, the past 5 market days. So if I go right here and I look at the past week, in my portfolio, it's up 3.93%. That's a decent amount for a 5-day period. That's $2,598. So that's some good returns over the past 5 days. I do not believe that the S&P 500 beat that. So if we take a look, the S&P 500 is up 0.84%. So not even close. It went up a quarter as much. So we did beat it over the past 5 days. Now, I've had other people tell me, isn't your portfolio just like the QQQ, right? The NASDAQ 100, more of those tech companies? Not really. In fact, if I go and I plug in the QQQ here, we can compare that over the past 5 days as well. That is up 0.97%. So that went up about 1%, and mine's up 4% for the week, roughly. So they're not really the same. Mine's very different than the QQQ. The concentration of companies and the weighting of them is quite different. So I would not compare it to that as well. But the good news is that we're beating the S&P 500 over the past week. That's great. But let's take a look at a longer time period. We can't just look week by week. I know investing is long term. Let's take a look since the beginning of this portfolio. This graph right here, I can show it full screen here. This is my portfolio, the Story Fund, against SPY, graphed out since the beginning, since I started it. And it's benchmarked, I think, very fairly. So the way that I benchmark this, I can actually show you the spreadsheet. But I keep track of every single purchase meticulously. It has the exact dollar amount of what SPY was trading at and the amount of money I put in and the portfolio value. And the thing that this does is it creates a very fair comparison as if I put my money into SPY that same day, the same amount of money. And then I can accurately tell the differences between the two. So the Story Fund, my portfolio is in blue, and the S&P 500 is in red, and you can see the difference in performance here. Over the first couple months, they were bouncing back and forth, but then it broke out at the end of last year, and I made some serious gains and I've seemed to be able to keep them so far, but it is a little bit more volatile. So my portfolio jumps up and down a little bit more. That's typically the case when you have a more concentrated portfolio. But I think over time, as this expands out over time, I can show you the whole thing. I think that this will get further and further away from each other. Right now, as it stands, the S&P 500, if I had invested my money in that, would have compounded my money at 11.7%. That's what I'd be at right now. My total returns would be 11.71%, but instead with my portfolio, I'm at 27%. That's well over double the performance. That is significant alpha over the S&P 500 as of right now. You might think, well, 11% compared to 27%, what's the real difference between the two? To give you an illustration of the difference, this performance right here, having $14,500 in gains, had I put this same money into SPY at the same times, it would be more like $7,000 in gains, more like $6,500 in gains. So I would have $8,000 less dollars in gains. And my portfolio value, instead of being $68,000, would be $60,000. So that's the difference. It's about $8,000 in difference, which is a good amount of money. So these unrealized gains are compounding at a quicker rate. But again, the goal is to continue to beat this over long periods of time. And I'm going to explain on this channel and go through how I intend to do that. But that's a performance update so far. Okay, now let's go ahead and keep filtered by the 1 week view. So we're still looking at the previous week, but we're going to organize it by my gains. And this will show you what companies have performed really well over the past week in my portfolio. The very top spot is Twitter. Twitter is a company I've been buying into recently. I made the buys of this $1,500 just over the past 2 weeks. And if you want to see my buys and sells instantly, I can't do YouTube updates every time I do a buy and sell. So check out the Patreon. There's a link in the description. I post instant notifications whenever I do buys and sells, so you can see them there. But Twitter's one that I've been buying into because I've seen sentiment shifting for this company positively, and I've seen the direction of this company shifting positively. So I can go through a couple things here. First of all, we look at the stock price overall of Twitter. This is their performance. They started out at $40 a share IPOing. It raced up with enthusiasm, and then for like the next, 5 years, it pretty much did nothing. It's been down. And then just recently it's taken off back to $71 a share. So it recently beat its all-time high previously over like the past 6 years. I don't think this was just random chance. Twitter has taken active steps to monetize their audience more and more. And there's some graphs that show that Twitter is heavily under monetized. So the amount of revenue that Twitter earns per user is drastically lower than other competing social networks like Facebook, Instagram, basically you name it, and Twitter earns less per user than other networks. But it's still a company that people use all the time. Users of Twitter are likely on it like once a day. It's very active. So there's potential there, is what people are thinking. There's potential with Twitter to really up its monetization game. And they've been trying to do that with a couple things. The first thing we can look at here is Twitter Spaces. This is a new feature that they're adding to Twitter. And I know that you guys are probably familiar with the Clubhouse app that like Elon Musk and all these bigwigs are going on. And it's like replacing news, right? The cable news business and the New York Times are upset because they're not the intermediary. They're not the middleman between the people and the people making news. Now they're just going directly to the people. And they're doing that through an app called Clubhouse that's had incredible amounts of interest. It's invite only because if everybody that wants to get on it could get on it instantly, it'll like crash the application. That's how many people want to get on it. Well, Twitter's building out something very similar. In fact, they've built it out, and from the people on Twitter that I follow that have had early invites to this, people that have been critical of other things Twitter has worked on, they've said this seems like a very good thing from Twitter. This seems like a home run. Basically, Twitter did I think they're called fleets, which is a copy of Instagram stories, right? The little circles at the top that you can look at a story. That was good, but it wasn't really impactful. People think that Spaces, which is the audio rooms for Twitter, they think that will be impactful. They think that will be something really big for Twitter. So that's one catalyst showing Twitter's being more creative. They're being more productive. They're coming up with new ways, to try to monetize their user base. Another thing that we've read rumors about is subscription services. Now, at first I was like, Twitter's not going to be able to charge a subscription to be on it. I don't think a lot of people would pay for that. And some of the ideas that have been thrown out, I think, are very terrible ideas. Like charge people that have lots of subscribers, right? Or lots of followers. So people like the Kardashians or whatever that have like millions of followers, make them pay to have that audience, right? Force them to pay. All I think that will do is it will probably make your most active people have less incentive to grow a following. If you know you're going to pay more to have a following, you know, that's a disincentive. So I don't think that that's a great idea. But there's at least rumors that they're playing around with subscriptions. One of the ideas that I do like is this one right here. I'll zoom in on it. And I think that this one is way more practical. One idea under consideration is tipping, or small payments users can give each other for exclusive content. That's similar to like Patreon. That's what people do is they like a content creator, they want to support them, so they give them like 10, 20 bucks a month, right? And that way that content creator no longer has to pick between doing other things and creating content. They can do that full time. Well, Twitter wants in on this game as well. And you can see that this has been successful. YouTube has the YouTube join feature that you can join like a membership of a channel. And I'm sure that's made YouTube a lot of money. That's part of the reason I'm bullish on Google, is because I think YouTube has so many ways to monetize. But Twitter's getting into this as well. But I like the idea of the tipping for Twitter in their instance much more than the subscription services. I think they could do a combination of both. Like you could subscribe to somebody on Twitter and give them like $1 a month or something, and then they can give you exclusive content or exclusive posts. I think they could do that, but the tipping feature I think would be really cool. So basically, you know, when I look at Twitter, they're being creative with the ways that they're monetizing. They have a huge user base. I don't see anything exactly like Twitter. There's nothing really ripping it off completely. You know, there's other people that have attempted to, but I don't see anything really copying it to the extent that they have. So I think this is a good long-term holding. I bought into it before its meteoric rise over the past week. So I'm glad I did that. Right now, if you're wanting to get into Twitter, I still think it's potentially undervalued. So if you buy into it right now, you can just dollar cost average in, and it'll probably be a good holding in the future. Okay, now moving down the list, I can move my camera out of the way here. Again, this is the past 5 days. So this isn't my gains overall with these holdings. These are just the past 5 days, and most of them I've earned a lot more overall. But the past 5 days, we have Twitter leading the pack. Then we have Square, Shopify, DoorDash, and PayPal. Notice that a lot of them are payment processors. Square's a payment processor. Then we have Shopify, an online payment processor, and then PayPal, which is everywhere. Venmo it's really taken over. These three companies, I think all three of them are buys. And I know that's controversial, especially Shopify, because it's so expensive. I've been hearing that since it was $60 or $70 billion market cap. Now it's a $170 billion market cap. Shopify has so much potential to grow, but I think that out of these three, I think all of them are going to do good. I probably think that PayPal is the strongest company out of the bunch. But the reasons that these are all doing good is because all of them have had great quarterly reports. PayPal is growing like a weed still. Same with Shopify, same with Square. People, when one of these have good quarterly reports, the investors will start buying into the other ones because they kind of trade similar to each other. They think, oh, this payment processor is going to do good. You know, if this one does good, this one will too. It's the same reason if MasterCard and Visa, if one of them has some like bad quarterly report, the other one will trade in line with it. It'll trade down the same day because they kind of have the same business plan. And investors view these three companies the same way. So there is some overlap with factors that you're exposed to. You're exposed to similar factors here, but I'm very bullish on all three of these companies. Square's going to continue to grow. PayPal is. Shopify is already priced very highly, but I still think there's growth left in the company. So any of these three, I think, are buys. If we look at DoorDash, this one is surprising to people. I've seen so many videos, even on TikToks, like mocking investors in DoorDash, you know, saying they're dummies, using this one as an excuse for the value, for the market being overvalued right now. I don't think that's the case. People look at just the total revenue of Uber and compare it to DoorDash, but they're not looking at the inside metrics of the company and some things that I think make this company unique. For instance, DoorDash started off with the same market share as Uber and Grubhub and all these other food delivery companies, but now they have 50% market share. How did they get to 50% market share and they outcompeted every other company. Well, I wanted to find out why, and I think I did. I found out certain things that the company's doing that other ones aren't, that make DoorDash unique to them. So I'm gonna not dive into all of that right now. I have another video that I'm gonna be doing on DoorDash that's gonna be like a full half-hour video on this company. So if you're interested in that upcoming video on DoorDash and some insights on it, be sure to subscribe to the channel. But this is another one. It performed 12% overall. And then underneath that, the last one I'll mention is Viacom CBS, which is releasing Paramount Plus. This is more of a value play. I don't know if this one's going to be a long-term holding, but it was undervalued. This company has Paramount Plus, which is another streaming service. In my mind, these are always easy ones to buy when you think they're going to have good subscriber numbers, because they come out and they say, look, we got how many millions of subscribers the first day. And if the number's like decent at all, the stock will trade up. It's such an easy kind of undervalued, looking at the fundamentals of it and then seeing the subscriber as a catalyst. I think that was an easy buy. So this one, I don't know how long I'll be holding, because in the streaming wars between Apple TV Plus and Amazon Prime and Netflix and Disney and HBO and, you know, so on and so forth, Viacom CBS, which has Paramount Plus and Peacock, all these different streaming services, I really believe that I know the winners, the ones that are going to be winner take most. And I think that's Disney and Netflix. I think those two companies are going to take the biggest portion of the market in the streaming wars per se. And I don't think that Disney means that you can't invest in Netflix. And I don't think that Netflix means that you can't invest in Disney. I don't know about Paramount Plus. I think it's a good value play right now. It could be for a little bit longer, but it's not one that I know for sure long-term. So my two picks in the streaming wars is Disney and Netflix. I think HBO Max is up in the air. There's other characteristics of that company that that kind of cloud out the performance of HBO Max. So now if I want to reverse this and we want to look at not which companies have gained the most, but which ones have lost the most over the past 5 days, we can take a look at that. And we have Tesla, which is down 6% for the week. And then we have Amazon, which is down 2%. Not many losers. Out of what, 22 holdings, I have 2 companies in the red for the week. I think that's pretty good. And Tesla down 6%, let's be honest, that's like a slow Tuesday. Like Tesla trades up and down 5 and 6% all the time. So that's not a big deal there. But overall, the portfolio is doing really good. Up $14,500 overall. I think that's pretty good gains considering the amount of time that I've been investing in this portfolio. So if you guys enjoyed this little update, and if you want to see these every single weekend, I'm going to be doing them every weekend. Make sure to subscribe to the channel. If you want to see what companies I buy and sell, like instantly, I have right here my activity feed. I can go through and show you, like I swapped out Apple for Facebook earlier this week, you know, based on some different valuations. And I do things like this throughout the week. So if you want to see these type of buys and sells instantly, check out the Discord. You can join there. And there's a lot more to do other than see buys and sells. There's a whole community there. There's over 1,000 active members. And I appreciate everybody that's a supporter. So we've had a lot of people join, like over a couple hundred people over the past couple weeks. So it's exciting to see. Anyways, hope you enjoyed this update. I'll talk to you guys soon.